Mike, are we live?
I think so.
We are live.
Yeah.
Okay, we're live on
At least my
Instagram,
Facebook.
Instagram, Facebook, YouTube. Welcome back. If you joined us last week, if you watched our recording, love to have you. Appreciate it.
Mm-hmm.
Mike and I are going to go over a couple trending articles from real estate and mortgage. Try and give our insights, and maybe it'll spur some conversation.
That's the idea. Try to get an idea of what's going on out there.
So, first things first, Federal Reserve met today. The chairman, Jerome Powell, could have been his last time speaking at one of these things. He's going to be replaced. So I guess it's just a matter of when. But why don't we first take a look at what he had to say? Quick snippet. Do your thing, Mikey.
There it goes.
Bang.
The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate,
So they didn't move interest rates, leaving their policy rate unchanged. The Federal Reserve, they make the rate at which banks lend each other money at. Right now, it's like 3.5 to 3.75, I think.
Right.
It was 0 when rates were 2%. When mortgage rates were 2%, their rate was 0. It's like free for the banks to send money back and forth. Some countries have gone negative, which I don't even know what that means, but
by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range 5 basis points. Normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks.
okay, so basically, I guess he thinks things are going pretty well, and they don't want to ruffle any feathers.
I feel like it's so different when everything's ground level, because people don't feel that way.
People don't feel that way as in the economy's doing okay.
Yeah. Like the whole stock market is propped up by AI and seemingly. And you talk to people on the ground, right? The day to day, going to the grocery store, going to do anything costs you $20 to walk out the door. Minimum.
$20.
Basically.
$100 is the new $20.
Right.
It's insane. Yeah, I get what you're saying on the ground. Yes, everybody I talk to is feeling the same way.
And there's still people that are worried about their jobs and if their job is going to be replaced or downsized or condensed or flat out moved.
Mm-hmm.
Right? You got to pick up and move to a different state if you want to keep working here. So it's interesting. It's just I feel like it's a huge disparity.
Huge. It's like you feel, yeah, it's bigger than ever. So we'll get into some articles that I have prepared, but real quick, we can take a quick look at the 10-year. So basically all that mumbo jumbo, like neither of us are experts in the economy of it all, but what does it mean for mortgage rates? Well, we'll have to see if people buy and sell the 10-year treasury. Right now it's up to 4.251. It was, when everybody was all, excited about 5.99 interest rate.
I was excited. I was very
Everyone
excited.
was excited. That was you can see here. I don't know if you can see it on the screen share, but the 10-year treasury yield was 4.13. It was like really moving back toward 3.99. So it's up. It's up quite a bit over the last couple of weeks, and so are mortgage rates. So just keep that in mind and take a look at this thing tomorrow morning. See what happens.
They basically had it at what, 599 for, I don't know, 2 hours total.
Well, that's what people don't understand. The rates move all day long. There's reprices. We get emails from lenders and we get emails from everybody all day long, from our investors and lenders that, hey, quarter of a point pricing adjustment, quarter of a point pricing adjustment for the better, for the worse, eighth of a point pricing adjustment all day long. It happens whenever something moves in the market or a headline comes out. So by the time that people are getting the news, it could be too late, or it could be, and we actually are going to get into some of that. So that's perfect segue, Mike. Well done. So here we go.
I'm also good at riding segues.
What is it? Yeah. All right. So here is from AP News. Average U.S. long-term mortgage rate edges higher, but still near lowest point in more than 3 years.
Yeah.
This is just like everybody's competing for clicks. I want clicks. I want views. I made an AI video of myself today and put it out to try and get views and clicks. So I'm not above it. That's what these people are doing. That's what these headlines are. They need to get clicks and views so they can sell their ad space for bunk beds or whatever the hell you Googled yesterday.
Right.
Yeah.
I mean, it is good that it's down. I mean, this time last year we were at like what, 7 something.
Well, yeah, last year's average was around 7.
That's dramatic. I mean, that's a dramatic difference. If they were to craft a headline around that, really highlighting that, that would make people probably feel good, as opposed to being like swindled and duped by like headlines like the one we have on the screen.
People just are always feeling swindled and duped.
It's chase. Like you want to. It's like everybody wants to chase the next like shiny best thing, and let's go chase this headline, go chase the rate.
Yeah, and
then miss it, of course.
So that would be a great headline, but I guess you got to get that kind of news from people like us, and that's what we're trying to do with this. Because we said it last week, and we're saying it this week, and we're going to keep saying it. Rates are down a percentage point. Rates are down from 8% 2 years ago. And that's another thing to note. I talk to people all the time that are like, oh, well, what about 3.5? What do you think it's ever going to get back to 3? You think it's ever going to? And that's crazy talk. Rates were around 8 for a year, and then they were around 7 for a year, and now they're at 6. And there's no reason to believe that they won't be around 6 for the next year. And all of the experts are saying that as well. So this article, average U.S. long-term mortgage rate, which is just a fancy way of saying 30-year fixed rates, edge higher, still near 3-year lows. So yeah, they are still near 3-year lows. The noise of it all is like when rates were averaged about 6.09, they dropped to 6.06, and that was the lowest for the year.
Right.
So 0.3 of a point drops it into the lowest. So these headlines are going to continue to come every time there's a little dip. Every time there's a little dip. But
Every time somebody asks me, like, I'm going to wait a little bit because, I heard just recently that they're going to lower the rates. And then I always ask people, okay, so lower the rates. What do you think that actually means?
Mm-hmm.
Lower the rates could be like 0.01 of a percentage point.
Mm-hmm.
So, like, what does that actually mean? And just because they lowering the rates doesn't mean that rates are going to be quote unquote low, like people think, like in 3 and 4. Like, that's not the case.
Right.
If they lower them, it's going to be by a tiny bit, which is going to be really negligible to what you have to do or what you're going to be paying. So you might as well, if you're thinking about doing this process, you probably like at least start the process, start looking, start prepping your home for sale, start getting your ducks in a row so that if they do lower rates and then it happens to be dramatic, that's awesome. But get your house, sell your house, and get it locked in. And then the next house you have, if the rates do come down, you already have the house. Great. You can refinance pretty quickly or, start making, larger payments on it, what have you. It's just silly.
Yeah, I agree 100%. And people, if you're reacting to the headlines, if you're reacting, whether you're an agent or you're someone who's buying or you're a loan officer, whatever, but let's just say you're somebody who needs to sell a house, and you want to buy a house, and you're waiting on the headlines to give you the cue to go, oh, this is my cue. You're too late. You're too late for a couple of reasons. You're too late, A, because rates could just as easily go back up just as quick, which they just did.
Right.
B, and this is our next article. Or this is a bit later in the next, but when mortgage rates went down to 5.99 and the headlines went nuts, mortgage applications went up 14%. So you're waiting to compete with all those people. Now, I did this in a YouTube show that I put out earlier. Mike, you there?
Yeah, I'm here. Can you hear me?
Yeah. What happened?
Bam. I don't know.
So I did this in a YouTube show that I put out earlier, but only 3 people watched it, so I'll redo it here.
Nice.
So this is a mortgage calculator on my company's website, and we're going to do a little game, right? So mortgage rates are at 6.375 today, okay?
Yeah.
If rates fell to 5.875, which would be like a super dramatic drop, the payment would be $23.66. It's $130 difference a month. If rates dropped tomorrow to 5.875, the internet would break because that would be such a dramatic drop. So I hope that what I'm trying to do is put into perspective what people are waiting for. Now, on the other side,
crazy. It's really crazy.
$130. Now, on the other side, if we went into my software and I put in a pricing scenario, 800 credit score, 20% down, I would get a spectrum of interest rates. 6.375 would be what's called a par rate. Doesn't come with a cost, doesn't come with a credit.
Yeah.
5.875 would come with a cost. And I could turn to you and I could say, okay, if you want 5.875, it costs 2 points. If you're buying a $400,000 house, it's $8,000.
Ooh. Yeah.
Whatever. Maybe it's 1.5 points. I don't know what it is.
Yeah, whatever. Still.
Whatever it is, there's a dollar figure, and I can turn and I can say, you're waiting on a rate, or you're hoping that rates get to 5.875. Well, here's how much you could pay to get it, or here's how much you could go tell Mike to negotiate with the seller to cover.
Yeah.
Instead of waiting until the rate is actually 5.875, and there's
everybody and their mother out of the woodwork trying to get the house now.
Right. So I'll share this screen next, this article. So when mortgage rates fell, things like this were put out. Mortgage applications increase, and this increase was by 14%. Mortgage applications increased by 14%.
Yeah.
That's crazy.
And you know what? There is hidden in this number is people that are super passive,
Mhm.
meaning they're thinking about maybe buying a house or selling their house and buying a house, but they don't act on it at all. And they're just they have the pre-approval because they happen to catch the rate at that dip, and they don't even take advantage of it. So it's actually there's good in that number, but there's also like the people that are just caught it. That's all great and everything, but don't actually act on it.
Yeah.
Which is a lot of people.
Well, there's people that made an application and didn't strike when the iron was hot, and they're like, oh, the rates went back up. But we're talking about, the average 30-year fixed rate.
And does that mean completed applications too, by the way? Because you can start an application and not finish it.
No, it's people. They defined it as people who are actively engaging mortgage loan officers, professionals getting pre-approved, and actively engaging real estate agents.
Okay.
So the rate that triggered all this was 6.16. 6.16. So, and I'm thinking 14%. What does that even mean? What does 14% even mean? So I, asked ChatGPT to run to, how many homes are bought per year, how many of those get mortgages,
Yeah.
to kind of get a big number of how many people that might mean. It comes out to about 14% increase is about 50,000 people a month new into the market whenever something like this happens, which is that's a big number. I mean, it's not like feeding frenzy earth,
Nationwide or like
nationwide. Yeah, nationwide.
Okay.
So 50,000 a month nationwide. So
I mean, it's all right.
It's a lot. In addition to whoever's already been looking or whatever.
Yeah, that's true. Yeah.
Can't get comfortable with my look here. That's a big jump. 14% is a big jump. I don't,
Yeah, but then what's it the next week?
What do you mean?
So some people will see that and be like, oh, there's too many people. Too many people are in the pool now. I can't make a move.
Mm-hmm.
But then, all those numbers are usually pretty much delayed, basically, right? So you fast forward a week, it's not like it's going up 14% every single week.
No, in fact, last week the rates went up a bit and mortgage applications went down 8%.
Right.
So it's extremely volatile. I think maybe that's a good takeaway as well. It's like it's extremely up 14% one week, down 8% the next.
Yeah.
So it's crazy. Let's get into something that's a little more your lane here, and let's talk a little bit about inventory. So I've got an article from Housing Wire.
Yep.
Couple big things that jumped off the page at me, and you can touch on these, but this is from January 21st, so last week, a week ago. New listings totaled 50,303, up 29% week over week and 9.7% year over year. Total housing inventory increased to 695,000 single-family homes, up 10.5% year over year compared to 632,067 during the same week in 2025.
So, and Kelly and I were just talking about this on our YouTube channel, but number one, it's extremely niched. So whatever this is saying, or the general national articles and news outlets are saying, is propped up, number one, by some other states that have a lot more inventory than, let's say, Maryland or Pennsylvania. For example, Florida, right? California, Texas. Those states have a lot more inventory than we do. That being said, if you were to go and look into northern Baltimore County, let's say from Cockeysville on up, that inventory does not align with this article
Yeah.
or other articles. But if you were to go to Windsor Mill and Randallstown and things like that, yeah, inventory is up for sure.
Are they building there, or what's that?
No, it's just, homes turn over a bit more in those areas. Smaller homes, more townhomes, condos, that kind of stuff. Turnovers over there is higher. And that's just a quick example, but things like that, it's extremely niched. So it just depends, number one. But, oh my gosh, my camera went off. Can you still hear me?
Yeah, I can still hear you.
I'll turn it back on in a sec. But let me just bang over this one real quick if I can. All right. Well, I'll just keep talking for a sec. But essentially, you just want to be able to see. Can you still hear me?
I was trying to do your voice. You want to be able to what?
You want to be able to get understanding of like what is actually going on in the neighborhood that you live, or the neighborhood that you want to live in, or both. Because it's not necessarily the case, because there's a lot of inventory that's coming on the market that's a lot of junk, and a lot that needs a lot of heavy repair and is overpriced for that repair.
Yeah.
And it really doesn't match up, and that's when it sits, and then that's when you get the articles about there's a lot of inventory sitting, things of that nature. Homes aren't selling. Well, that's because they're overpriced and they need a lot of work, and they're in areas that are a lot less desirable. And then you fly up to the neighborhoods or the areas that are desirable, and you don't have that problem whatsoever. You actually have no inventory. And if you sell, you're still in a seller's market. And if you're buying, you're competing when those homes do come on the market.
Yeah. So, all right. So this is national, and definitely you're going to have little pockets, and everybody's reporting something different. So it's important to, if you're looking in Baltimore County, if you're looking in Maryland, talk to them talk to somebody like that. And if you're looking in a different part, do your research, ask somebody you trust if they know somebody and like somebody in the area, and they can give it to you. Now I found this a little interesting. Median price held steady at $419, and the new listings coming on, average new listing price coming on was at $399. Price reductions continue to track near last year's level, with 34.2% of listings taking cuts versus 33.5%, and 2.2% of listings recorded price increases. Now, it's a great point Mike makes. Great point you make, Mike. About it's different depending on where you are, because you're exactly right. It's different zip code to zip code. It's different state to state, and these articles are nationwide. Maybe next week we can get. I don't know if people depend on people like you to report the local news. You're the Tom Tasselmeyer of our generation. Okay.
I saw last time I was in CPK. I saw Tom Tasselmeyer. Matter of fact,
was he a weatherman, or was he a
he's
bona fide news guy?
He's still there. Yeah, he's the weather guy.
He's weather. I only ever knew weather guys.
Right.
Bob
Tim
Turk,
Tootin, Tim Tootin's OG.
Tim Tootin, Bob Turk, Tom Tasselmeyer.
Deborah
Hey
Wiener.
Tom, if you're watching, if you're a friend of the show, is that ice gonna melt or what?
Seriously, we need to be melted out here. It's insane.
Yeah, Mikey needs to show houses. He can't be slipping on black ice when he's showing houses.
No.
What else we got on the docket here, Mike?
Well, if I could come back to stream, I would. I have no idea why I'm out.
Yeah, you had that fancy webcam. I was about to ask you what kind it was because you looked really good. Your color grading was nice. Let's see what else.
It's a damn shame.
It is a damn shame. Zillow came out with an article as well. Zillow is predicting price forecasts to be up 1.28% this year. They expect about 4.26 million homes to be sold resale, not new construction. Their economist is estimating that there will be, let's see. Their economist is estimating that there will be mortgage rates will hold around 6%, with affordability slowly improving, and they expect new construction. Mike, where you at? They expect new construction to slow as their inventory mounts, and I can vouch for that. I don't know about your area, but where I am, tons of new construction sitting. And these builders can only give away so much to incentivize people to buy. You know, they're giving away. Been holding these properties for a long time now, and they've been giving away $30,000 or 4.2% interest rates or whatever. So Zillow expects them to slow building. So we'll see about that. Mike, you can comment about this, but from what I'm seeing, my perspective is from reading these articles and from understanding what's going on, and then from being in this process with people, it doesn't seem to be. You can't sit here and say it's a buyer's market anymore. You can't sit here and say it's a seller's market anymore. It is dependent on where you're looking, but it seems to be like a market where, especially if it's a nice house and it's priced, right, and it's just not getting tons of action. The market is more of like a, hey, make us an offer and let's negotiate. Let's talk. Let's see where we can land. It's not like people are getting offended by a low offer. They're entertaining concessions. Maybe they are, maybe they aren't. What are you seeing? What are you seeing as nobody can see you? Is he officially gone? Am I talking to the freaking wall? Well, if you're tuning in on Mike's YouTube channel, we'll be right back. There you go.
No, I'm here. Can you hear me?
Yeah.
Okay. Yes, it's becoming a little bit more of a balanced market. Like the last couple listings that I've had, very well maintained homes, very nicely prepared. Sellers listened to my suggestions to get it ready for sale to a T. And typically, if you were to even go back a year, and certainly 2 years and more, these homes would have 6, 7, 8, 10 offers on them, whereas it's been less than 5. Depending on the house, it was either somewhere between 2 and 4, which is a dramatic change comparatively to where we were. And people can come in, do some inspections, ask for things and actually get them done, as opposed to, we're going to do inspections, but we're not going to ask for anything, or we're not going to do inspections at all. Anything like that
at all is insanity.
Oh, it is such a thin line to walk, especially when somebody wants a house really bad. You really got to coach them on all the possible situations that can arise. And, you know, I will, if asked, I will say what I would do, but, you know, try to give people all the facts and they will make their decisions as they may. Even if because even if you tell people, no, you should not do that, and they want to do it, they're going to do it anyway.
Mm-hmm.
That's just human nature. But just try to give people all the facts and all the scenarios so that they can make the most informed decision. But, you know, it's a little easier to get a house. And on the sell side, you know, you're probably sweating it a little more than you were before, but not dramatically, because it's still, you know, as long as your house is ready to go, it's going to sell.
Yeah. I think a big piece of all this is like perception. And from a seller's perspective, homes appreciated more in a couple of years than they would in 10, you know? So it's like people have a misconception of what kind of equity they're gaining year over year. And there's people that own houses for 2 years and think they're going to turn around and sell it for a huge profit. And it's like 2 years, you're lucky you're breaking even.
Oh my God. Yeah.
And then on the other side of things is the rate thing, like the perception of rates being high at 6%, where it's like, they're kind of good. That's kind of good. Not compared to 2, but you know, that's crazy talk. And then shoot, I can't believe. So one of those stats that we shared, the new inventory, which Mike hated that, I could tell.
I hate that because it's so misleading.
It is misleading, but it's also nationally true. So nationally, new listings, it was the highest week of new listings since pre-pandemic, and I was like, it's freaking crazy. It was 6 years ago. Pre-pandemic is 6 years ago. Is it even relevant to talk about anymore? Like, is it going to be 20 years and we're going to be comparing to pre-pandemic? I wonder after World War II, they were like pre-World War II for like, I mean, I guess.
Yeah. Oh my gosh. Yeah. It's very weird to think about that, but I guess that's like, I mean, maybe it should be like, let's excluding pandemic years. Like that should be the thing.
Yeah. Yeah.
That was it's just a different time. It just doesn't correlate really to what we've got now.
There was a time warp. Something that whole time, that 3 years was just warped time. It's weird.
Vortex.
All right, Mikey. So let's wrap this bad boy up. We are at 33 minutes. My takeaway, and I think people are feeling it. Things are stabilizing. Prices aren't skyrocketing. Rates aren't plummeting. Things are stabilizing. At least if you are in the market and you're shopping, you can see some consistency in your rate week over week. Maybe it's ticking up, ticking down an eighth of a point or a quarter of a point. But from my perspective, it feels pretty stable. I'm not getting a loan in and like sweating. Oh, rates are going to jump by half a point and I'm going to be screwed and my guy's going to miss out. I'm not feeling that way, you know? And I've been doing this for 13 years, doing that, like sweating at times. And it just doesn't have that. That's not the vibe.
As long as people have stability and they have some idea that things are not going to be such a roller coaster, they're comfortable making a move, whether it's getting their house ready and selling their house and moving within the state or out of the state, or people buying their first home or transitioning from a townhome to their first family home. As long as they have that stability in any regard, they're going to put their best foot forward. If there's any turbulence, they're not, plain and simple. And right now we have some stability, which we're seeing with, people really starting to get in gear, whether it's getting pre-approved, starting to look at homes, or starting to make preparations to get the things done on their home that they need to do, so that when a month from now, 2 months from now, they're ready to make the move, that the house is ready to go.
Yeah. And speaking of turbulence and things like that, if you can bear the turbulence, you're going to win.
Oh
And
yeah.
if you can take action when everybody else is like not, you're going to win. And that goes for young people too. One of the guys from Broke Agent Media made a post this today, and I commented it, but it was really good. It was like about Gen Z, how like all of the news is like doom and gloom, and it's so bad, and like that scares people, and they don't want to buy houses.
Yep.
They think they're never going to own. But there is a
Yep.
pocket of those Gen Zs that are taking action, and they're winning. They're buying their so. I would love to work with some Gen Zs. I would love to help them get into a home, even if it's a couple of friends or somebody that, your one friend is making some money, so you're all moving in together, and that's the move.
That is the move, man. Oh my God. If I could turn back time, I would buy a house so we could all live in it together. It'd be awesome.
Yeah. Well, we did that with Carlson.
Yeah.
Hey, I'm a little late this month. Carlson, can you help me out?
Mikey checked in on Instagram, so Mike, I hope you're watching and hope you heard that.
He did. He checked in?
Yeah.
Nice. All right. Well, Mike, you got any CTAs? You call to action there? Wrap this baby up with some hit you up where they can find you and all that crap.
If you're watching this, you're probably already connected with one of us, but if you're not, connect with the other and check out each of our YouTube pages. And we're trying to do this every week. I'm sure we'll miss one or two every once in a while, but the idea is just to shoot the breeze, get an understanding of what's going on out there, so that, look, if you are in the market, either buy or sell, that we'd love to help you, but just so you have an idea of like what's out there, what it's like with no pressure. So hopefully you can take a nugget or two.
Okay. All right, Nugget.
All right, Nugget. For Adam, I'm Mike, and we will see you on the next stream.